if you want to introduce yourself, Ryan Durrell from, I was going to call it Axima Insurance, but it's not. It's a different, you had something else on your signature when I saw it.
I would be happy to clear that up. No mysteries here other than we do actually have two trade names. So okay. I am Ryan Durrell. I am the general manager for the Professional Liability Insurance Program administered by Regal, which is a real mouthful for the Regal program. And in that capacity, I'm also an insurance broker. And so we have two trade names within our company, which has the very sexy name 3303128 Canada Inc., which is the technical corporate name. But in that we have two buckets. One is is Axima Insurance Services, and the other one is Alternative Risk Services. And if you call me as a RICO registrant, you're going to get me with my broker hat on, which means that my job is to provide brokerage advice to you. And because I'm your broker through the RICO insurance program, and we are not predominantly in a mode to sell anything, you can call me and just say, hey, I heard XYZ. Can you clarify what that means? I heard that this isn't covered. What does that mean? And so my job is really not to sell you any insurances. You already are my client. And I really pride myself and my team for providing completely unbiased advice with respect to insurance services. So you won't get a hard sell from me on anything. That said, today is to talk about something that I think that you should at least think about. So that's where I'm coming from. How's that, Aaron?
Awesome, good. Go to it now. Do you have the host settings or whatever? You can share screen if you need to, and all the rest.
Yep. I don't. I would actually like to change things up and not share my screen, because I really want this to be a conversation, and I think it's not. I'm going to give you a couple resources, and I can type those into the session, but you also have it recorded so you can pull it up and play it back, and I'll share those by email, Aaron, places you can go for some additional resources. But I'm going to recap a little bit about what the insurance program, the RICO insurance program, covers, so that we can sort of highlight where this discussion on general liability comes in, because this is a very technical difference between two products. And I think, sort of drawing the difference between an insurance for your professional services, which RICO has a mandate to overlook or oversee, and the general business activities that everybody who runs a business in Ontario would have, whether you're, a doctor, a dentist, or, a shopkeeper, somebody who runs a convenience store. There's a general liability aspect that you would have, say, on your home, for example. And that aspect is the piece I really wanted to talk about. And this is really me trying to let you know what the RICO program doesn't cover that you need to be thinking about. And it doesn't apply to everybody. So that's where I want to say, this is not me trying to sell you something. This is me trying to educate my insureds, my clients, on an area that may or may not be covered for you. So let's start with what the RICO program covers. I think you all will know it as the Professional Liability Insurance Program, and it covers you for all your professional activities. And actually the key definition in the policy is the definition of professional services. And it kind of lays out what that policy is supposed to respond to. And really it kind of centers around what is your professional duties. Your professional duties to your client is to help your client find the right property for them, make sure it fits their needs, et cetera, et cetera. And there's a lot of peripheral stuff around that that's important, like this sort of incidental property management type stuff you might do while you're doing an open house. Like you might be responsible for collecting checks if you're doing a leasing thing and so on, and making sure those calculations are right. So those are all the professional aspects. But the thing that the policy doesn't cover through an exclusion in the policy, which is the bodily injury and property damage exclusion. In a sort of historical twist, this is an exclusion that actually provides coverage. So I know that sounds super backward, but it basically says we don't cover this, except when we do. And that exclusion will actually say that it doesn't cover bodily injury except for, and it lists a few situations. And the situations are where you're essentially selling or responsible for selling or buying a house. And you have been there and you have clients who have been there. So it's a very definitive situation. And it doesn't matter whether it's a transaction. It doesn't matter whether it's a sale or a lease, but it does limit it to those situations. And that's important because there are claims for bodily injury that come up for when you don't have that kind of relationship. It's not related to a transaction. It also requires it to be somehow related to professional services. And sometimes you're there for other reasons, right? You're sometimes there to meet and greet them as part of part of your general responsibilities as a business person to, market your services. You might meet with somebody, to get introduced to them and so on. And it doesn't necessarily cover you if you don't have a transaction in play. And I'll draw a parallel to this because we often have people ask if they have to get a commission in order to get covered by the Regal professional liability policy. And the answer is no. There's no requirement for there to be remuneration, but you have to be providing professional services. Otherwise, it doesn't cover it. I'm pleased to actually have Tim Clark on the call today. He's watching, and I'm really happy that he's here. Tim is from our claims team, so if Tim feels like he wants to chime in, I'm inviting him to certainly chime in. But I'll just keep going for the time being. That limit for bodily injury, so it says we don't cover it except when we do, and it's in those specific circumstances, and it also only covers it for up to $100,000. So you can imagine that in the world of liability, $100,000 is not $1 million, which is what the rest of the policy covers. And the reason for that is that it's hard to injure somebody with professional services, with advice. And realistically, on the professional side, we don't have a lot of claims for people getting injured by professional advice. You should buy that house. Well, it was so exciting. I fell down and injured myself. Like, that's not likely to happen. And indeed it doesn't on the professional side of things. It also covers, carves in coverage for property damage. And we do see some claims for this, and it also includes theft, for example. So if somebody steals something at an open house and you haven't required them or asked them to hide those items, even if you have, they can still sue you for lost items at an open house. And from time to time, the policy will cover those kinds of things, or broken or damaged things from wrong placement and stuff like that. But that's where it sort of stops. And in my normal presentation that some of you might have seen last year, I would have talked about this exclusion on the policy. And I would have pointed out that if you're doing other ancillary activities like property management, this particular exclusion and its sublimits are important for you because it draws so much, property management actually draws those kinds of claims in, and you need the appropriate coverage, whereas real estate professional services, not so much. So why am I talking to you about all this? This is to say that people falling down and injuring themselves and property getting damaged and, at a property you might be somehow related to does happen. And it's not always professional in nature. And that's where we bring in the insurance type, which is general liability insurance. And general liability insurance covers the liability that every business owner would have. It's failure to do what a reasonable person would do, resulting in somebody getting hurt or property getting damaged. You create liability for yourself in a general nature. And my favorite way to explain why professional liability and general liability are two distinct and different things is, imagine, if you will, a dentist. So you go to the dentist and you're standing in the front foyer, and I don't know why, but my dentist has the world's glossiest marble entranceway of all time. It's so glossy, and they have little booties at the front door so people don't fall, which is great because as a broker, I notice these kinds of things. But if I slipped and fell down in their front hallway, I've never even seen the dentist yet or a hygienist. Is it general liability or is it professional liability? And this is where if I was in the room, I'd be able to pull the room. Does anybody feel like this would be a professional liability aspect? So if I fell down and injured myself, would I sue that dentist for his professional liability?
I think it would be general liability.
Exactly, Shayan. And that's exactly what I'm trying to get at, is that there is a liability aspect that is general in nature that can't be pegged to the professional side of things. And from the program's perspective, our named insured is Regal, and they have a distinct mandate from the government for the provision of a professional liability insurance program to protect consumers, which has the side benefit of protecting the registrants insofar as it provides a defense and so on, and tries to get at the reasonable outcome of a claim to determine liability, so we don't just pay everything. But they don't have a mandate to provide general liability. This is a business person's prerogative to purchase it. And so in some cases, it doesn't make sense for somebody to buy general liability. And I'll give you a for instance. If you don't do any transactions, for example, let's say you're a registrant who's sort of working in another area or just parking their registration at a brokerage, it doesn't make sense for you have to pay for general liability all year long. And it doesn't make sense for us to force you to, because it's just, there's no exposure there. And RICO does not have a mandate to provide that. So it doesn't necessarily apply to everybody, the general liability aspect, but it does apply to people who are active registrants. And so in some cases, brokerages have made available to them a coverage for general liability that extends to all the registrants. And I think if we dialed back the clock 20 years ago, that was probably generally the case, that the insurers provided those policies. But of late, we've noticed on the program that that's less and less the case. And I can say from personal direct experience, I've called insurers, Chubb, Intact, like mainline domestic insurers, and I've said, do you cover brokerages for their agents' activities as subcontractors who are off the premises of the brokerage? And they flat out said, no, we do not cover that. And more as claims come forward on the professional liability program for bodily injury and property damage, we get some insights into what the general liability carriers that are servicing the real estate community are doing. And more we're finding they're denying claims for the individual agents. So they might provide some coverage to the brokerage who's buying it to cover off their premises, which is a requirement of a lease. So they would have it for that case, and it might respond, but it doesn't necessarily flow down to provide coverage for the individual registrant. And this is further exacerbated by the fact that the contracts that are standard in the industry, in fact, I've looked at the standard OREA contract, actually says that the registrant, the individual registrant, will indemnify or hold harmless the brokerage. So that's the standard wording in the industry. And so if a claim comes forward as a result of your activities as an independent contractor to a brokerage, that standard industry contract is actually saying that you will indemnify the brokerage for anything that should come to harm to the brokerage. So let's say a claim comes forward to the brokerage because of your activities, and I've got some anecdotes to share to sort of clarify this, then you could be held responsible for that and actually have to pay the costs of the brokerage. The reality is that's not 100% the time. I've talked to Aaron and the management at your brokerage, and you're actually with one of the few insurers that does tend to provide coverage to the individual. That said, it would only respond to a claim where the brokerage was named, and it's entirely possible because it's up to the actual consumer who they're going to point their lawsuit at. And they might say it's going to be just this one person, you know, instead of the brokerage. And it's their prerogative as to who they do it. Tim is on the call, but I'm going to steal his line. And he would say, I can't stop somebody from suing you. I can only defend you if they do. But he can't do it if it's not a professional matter. So if it's just a general liability matter. So I'm going to stop there for a moment before I launch into some anecdotes on the general liability aspect, before I get into how we've tried to solve this. Does anybody have any specific questions about general liability versus professional liability? Hearing that, I'm going to carry on. So let me give you a couple scenarios. One of the things that really brought this to our attention about probably 4 or 5 years ago, when we started looking into it and I started making calls to insurers, we had a registrant who had, years after a transaction, being forwarded a lawsuit claiming that she was somehow responsible for their physical injury. And the nature of the physical injury, I think, had something to do with them falling down to go collect something from the property. It was just such a ridiculous lawsuit. There's no way that this registrant, this individual, was to be held responsible for the conditions of the property 2 years after the transaction. But nevertheless, when it comes time to blaming other people for your injuries, there's no shortage of looking around to figure out who to blame. So they sued the individual and they sued the brokerage. And the brokerage was with an insurer whose name I won't utter, but the insurer basically denied coverage to the individual. And they further held the individual responsible to cover the brokerage's expenses. As an independent contractor, they were deemed to have been responsible for this matter. And so even though they had no ultimate liability for the injuries sustained, they had to defend it, they had to hire a lawyer, and they had to cover the defense costs for both entities. Last I talked to this registrant, they were in the hole for $250,000 of defense costs. And they came to us as the professional liability program and said, if you want me to tell my story, I'd be happy to tell it anytime. And that really tipped us off to the fact that this is becoming an issue. We dug into it a bit more. We realized that it's more of a systemic issue than we thought, because the insurers were more denying these kinds of claims. The second time I heard about this issue, and these are kind of fun stories to tell, because you sometimes shake your head like, how does this even happen? So brokerage in Southern Ontario, not in Toronto, not that it's particularly relevant, just want to make sure you know it's not Century 21. A brokerage in Southern Ontario had a registrant, an agent, selling a house. And another registrant from the same brokerage went in as a buyer. So not as an agent, but they went in to look at the property on their own as a buyer. They booked it, they went in, and for some reason they decided this is a great opportunity for me to explore the outer edges of this property. So they were at the back property line walking along, and I guess it was fall time, and the leaves were covering up the ground, and they tripped on a stump on the ground. And this is firsthand the brokerage owner telling me about it, because they called me specifically to chat about it and see if there was coverage. They tripped, fell down the hill at the back of the property, grabbed onto a tree to stop their fall, and tore the muscles in their arm. And they sued the homeowner. So they didn't go after the registrant. They didn't figure the registrant's responsible for clearing the leaves and demarking that this could be a tripping hazard. So they sue the homeowner. The homeowner reports to their homeowner's insurer. The homeowner's insurer then countersues the brokerage, the selling agent, and the broker. So the brokerage and the selling agent as independent parties. And so the brokerage then reports to the general liability carrier, who then denies the claim as against the individual. And so they called me to see if that was even possible. And I said, absolutely, it's possible. And we had started to see this. So as it turns out, and I don't know what the outcome of the actual claim is, but they were unable to cover that individual agent through the general liability policy. So it is very much something that happens, albeit fairly rarely. So I don't want to blow it out of proportion. This is like a 10 times a day situation, but it does happen. And it drew it to our attention, and keeping in mind that we don't have a mandate through RICO to provide coverage for this, we started seeking out a way to cover off this this risk. And the reality is that even if your brokerage wants to go buy the coverage, it's rare to find it discreetly included. And so we had to find a solution for individual registrants. At least I felt an obligation to find a solution, albeit I don't make sales calls per se to try and sell it. But I want to have a solution available. So we've come up with a solution where individuals can now buy this coverage. And if you were a small brokerage of 2 or 3 people, this coverage would have what's called a minimum premium, which means that it would be at a minimum $1,500. How do I know that? Because I had a registrant who purchased it. And so they bought a brokerage level policy from an insurer that I don't believe still covers brokerages the same way. But they bought a brokerage level policy just for themselves. And at that price, it doesn't really make sense because the brokerage is already covered. Why should the individual pay the same amount? So we went seeking out that particular coverage. In doing so, however, we saw an opportunity to cover off a couple other things. So before I launch into the couple other things, I'll stop there and see if anybody has any questions, any stories to share, anything along those lines. Okay. So the second piece, as we worked with an insurer to try and cover off the individual agents, we looked into what other things that individual agents might want to have. Because if you're going to go out and buy a policy that you never bought before, it better have some nice add-ons to make it even more worth your while. And we came up with a couple I think are absolutely key. One of the stories we get told quite a bit, having a commission protection program in the RICO policy, is that a registrant is seeking to recover some lost commissions because a consumer has decided quite on their own and in a rogue manner not to pay their commissions in some way, shape, or form. And they ask whether or not we support the expenses of going after the commissions. And the reality is that we don't. We only defend commissions lost at the hands of another registrant. So if your brokerage goes bankrupt, or another brokerage goes bankrupt, or another registrant does something to cause you to lose your commissions, we can cover through the RICO program commissions losses between registrants. So if one registrant does something that stops you from getting your commissions that ought to have been received, then that would be a claim under our program. But if a consumer decides completely of their own volition to not pay your commissions, and I hear the story and it's just gutting because you've done the work for months to help a consumer, and then they just jump and do a private deal or whatever the case might be, you don't get paid for your hard work. And that's troubling to me in particular. So we found some coverage that will actually provide you with the legal costs to pursue your commissions in the event that somebody breaches their contract with you to provide those commissions. So this is through an add-on to this general liability policy, which is called the legal expense cost coverage. And it's through a company called ARAG, A-R-A-G, and they used to be called DAS or DAS. And they have a couple of really nice value adds that we've been able to get included in the policy. So that's the one piece of it, which I think is a real value add. Another one, which I think is particularly important as, as it's very challenging to meet all the requirements of RICO. And sometimes you can have somebody who pursues you with RICO and makes a complaint against you. It actually covers the defense costs of sort of defending yourself against a regulatory action. So there's a regulatory defense cost coverage baked into that policy that'll cover up to, I believe it's, I should know this off the top of my head, but I believe it's $10,000, 10 or 20. Yeah, $10,000 of defense cost coverage in the event that RICO should come forward and look to make allegations against you for the ethical breaches, etc. So you can hire a lawyer and have the policy cover those costs. Actually, I believe they assign a lawyer to you who does that type of work. So that's another value add. The other thing that it does is provide coverage to those with personal real estate corporations. And this was one of the things that took us the longest time to try and arrange for because, well, as you know, PRECs are fairly new. They came out in 2021, I believe, in October. And in the consultation and the work with the ministry, RICO had to make the call to not cover the PREC within the professional liability program. And it kind of makes sense when you look at the way the regulation is worded. It's a personal real estate corporation, not a professional corporation. And it is actually forbidden from providing professional services. So why provide professional liability to an entity that can't provide professional services? It does make sense when you look at it that way. That said, it doesn't stop anybody from suing your personal real estate corporation for professional services to the extent that their lawyer has done a corporate search on your name and figured out that you are the sole director or shareholder of a corporation in Ontario. So it doesn't stop somebody from making a claim against your PREC, but it doesn't, it can't actually provide services. And if you've held yourself out as doing that, then that's unfortunate. I don't believe you'll be able to find any coverage anywhere for doing so. But you still have to make the defense. You still have to defend your personal real estate corporation. So again, going back to most of what I know because registrants have called and told me, and I have to applaud registrants who call and ask questions because it's one of the best ways we have for developing the RICO program, developing ancillary programs. And so one of the questions we get is, how do I cover my PREC in case it gets named in the lawsuit? And there's really, up until we put the program together, was really only one way to do that. And that's through a policy called a miscellaneous professional liability policy. And I liken this to trying to hammer in a finishing nail with a sledgehammer, because a full-blown professional liability policy would make sense if your PREC could provide professional services, but it can't. And unless you've gone out and portrayed it as doing so, really, what liability should it have for professionals? You have professional liability insurance as an individual through the REBA 2002 or TRESA 2021, however you want to call it. It points to you as being the professional, and you have insurance for that. So it's really a matter of redirection. And that's exactly what we got this additional coverage to provide, is the redirection coverage. So hiring of a lawyer and covering the cost of that lawyer to redirect the claim to say, you're barking up the wrong tree. My personal real estate corporation doesn't provide professional services, and you should seek out your damages from the professional, which is the individual. And we've been able to coordinate that coverage through the claims team, who, if they see that the personal real estate corporation is named and you are somebody who has this coverage, they're able to direct that coverage to respond in a sort of one and done type way. So these are, I think, the three key components: the personal real estate corporation coverage, the defense, the legal regulatory defense cost coverage, and the ability to pursue your commissions in the event that somebody doesn't pay. Those are the key pieces. There's also some other additional pieces that, I don't know that they'd ever be triggered, but the one that does stand out is the driver's license defense cost. If you're at risk of losing your driver's license, they will in fact hire a lawyer to defend you, to prevent you from losing your license. So say, for example, you're in an accident and by some turn of events, it looks like you're going to get blamed to lose your license, which is probably a necessary tool for your doing business. I think that's an important piece. I don't know that that happens a lot, so I don't want to pretend like, oh, this is really something you should worry every day about, but it's a nice value add. So those are the three things. So how do we package this together? And again, this is not a hard sell in any way, shape, or form. It is not an obligation of you to buy it. I do not want to pretend that it is, but it's definitely a way to protect your assets from an errant claim for general liability, as well as adding value through those other coverages. And you can get that information. And again, I'll send a link to Aaron after the call through realistinsurance.com. So REALIST insurance.com. And you can see more details about the policy coverage. You can sign up for it. You can purchase the coverage directly on the website. And it's fairly easy and done. If you want to, and I always recommend people seek out advice of an insurance broker. If you have a commercial insurance broker, and I must specify commercial, then I would seek out advice from your commercial insurance broker. But if you don't, we wanted to make this available for easy access. And I believe if you're seeking out the price, it starts, I think, around about the $350 mark. So it's not any much different than your Regal coverage. Actually, I think it's less expensive than your Regal coverage, and it provides $1 million of general liability. You can choose 2 million, and it provides all those additional features to it. So that's the end of my spiel. I wanted you to know it was available, because that's probably the most important thing. If it's not the right fit for you, unlike your Regal coverage, which you're required to buy by law, this is something that's completely, if it makes sense for you. We've tried to craft an option for registrants that's not otherwise available in the marketplace that covers this aspect of your business off should you need it.
Thank you very much.
Thanks, Aaron.
I'll start the questioning off just with a conversation more than a question, because I'm not sure whether or not this gets into a legal question or not. But I would imagine when it comes to a PREC, so I usually, like they always say, follow the money, right? And so you're paying yourself into, you're receiving commissions into your personal real estate corporation. Therefore, it has the money. And anytime a lawyer is going to go after something, would they not automatically, if they knew you had a PREC, which means they have to do that search you talked about, wouldn't they for sure put that on there? Like we have that happen all the time where we'll get named in a lawsuit just because we hold the deposit. So wherever the money is, you get named because you have to direct that money from that entity to be released. And unless it's named, they can't do that. Now that's a legal question, but I don't know. Does that make sense to you? Like that they would name the PREC? That's the big question these days.
Yeah, Tim, are you available to take that question? I don't know if Tim is available to take that.
I'm just thinking, like we've had this discussion amongst a lot of our agents when it comes to a PREC, and I guess time will tell, because again, it's fairly new and we don't know because it just hasn't happened. So, but thinking about what they would do, Isabel, you had something to add to that?
Not about the PREC. I have a different question.
Okay, well, we'll deal with mine first.
Yeah,
Tim, I'm going to let you handle this. I'm going to be back in 2 seconds too.
Yeah, go ahead.
Okay.
Tim.
So yeah, as far as actually adding the PREC, I guess it depends on the nature of the claim that a lawyer is making. If they're making a professional liability claim, one of the things we would try to do is persuade them that you're, as Ryan says, you're barking up the wrong tree, because it's the individual's professional liability coverage that you're looking for, and the PREC doesn't have any. You're saying about an agent paying themselves through their PREC and following the money. Well, you're not really looking for the agent's personal assets. You're looking for the agent's coverage, right? If
You're looking
suing
for the agent,
professional.
Yeah,
So-
I wonder whether or not even agents are thinking that they can hide their money in their PREC and say, I don't have any money to pay you, sorry, but they probably can't do that.
Again, it depends on what kind of a claim it is. If it's a claim in a personal debt and so forth, then yeah, I would agree with you that a lawyer is likely to sue an individual and try to trace the money to wherever it went. But in the sort of things that we deal with, it's a professional liability claim, and the PREC, one, isn't an insured, and two, it isn't a matter of the agent's personal assets. It's a matter of their coverage. So yes, a lot of my brethren at the bar will cast a wide net and name everybody in sight. And one of the things you try to do is say, look, you got an agent who's got coverage, they're being defended. You don't need an entity that isn't covered and is never going to pay you on this. So.
Isabel.
Yes, I was hoping you could expand a little bit on the defense costs against RICO complaints. We've had several instances where our agents go ahead and sign off on the waivers that RICO demands, just not to have to escalate it to a hearing or further. And I'm wondering, and usually it's because of costs involved and the possibility of fines, et cetera. And I'm just wondering if you can expand a little bit on your defense costs.
I'll be happy to. So it is specific to defense costs, so it won't cover the fine portion of it. And in fact, most insurance policies won't cover fines and penalties, including the RICO policy itself. But it will provide you with that legal defense cost coverage. So it'll cover the cost of the lawyer to help you defend that matter. And the reality is that if it's the kind of thorny event where you want to have legal representation, this might provide you with the additional financial buffer to take it that bit further rather than consider folding your cards and saying, I'm going to pay that final penalty or whatever they're saying the reparation might be in order for me to move this along. The RICO program itself does not get involved in any way, shape, or form with the regulatory matters or the complaints department. So this aspect is very much separate and apart from the RICO policy. And as far as I know, it's unique in the Ontario landscape, because it does provide that additional financial buffer for, covering you off to provide professional representation in those kinds of matters.
And
But Isabel, I had seen the situations that you're talking about where an agent will decide that they'll agree to a statement of facts or a penalty or whatever, just because they don't have the money to fight it. And in this case, that kind of coverage, that would, maybe give you just a few more arrows in your quiver if you wanted to defend it a little further, or with the assistance of counsel, tailor what it is you're going to be admitting to and so forth.
And
we don't get involved in it on the professional liability side, but frequently an insured is going to agree to an agreed statement of facts, and they want to know from us, will them making an agreement jeopardize their coverage? And it's always better for me if an insured in that situation is represented by defense counsel on the regulatory side, because then we can go back and forth on, sort of what should go into a statement that isn't prejudicial. Frankly, my answer always is just tell the truth.
mm-hmm. And just a little bit further on that, I know that the lawyers that the insurance program uses are excellent. They have excellent knowledge about real estate and about how RICO operates and how the industry operates. And I'm just wondering, in this instance, when you're talking about the defense costs, are you going to have specific lawyers who are very knowledgeable about RICO and their powers?
That is a fantastic question, Isabel. And we are not actually, as opposed to the insurance program that's put together by RICO, where we have the ability to reach in and define who the legal counsel are. This is an insurance product in a more traditional sense where it's purchased off the shelf. And so the defense counsel will be defined by a RAG, which is the legal expense cost coverage insurer. That said, as your broker, if you were ever found yourself in that event, it would be my pleasure and duty to act on your behalf to advocate for counsel that you would prefer if you were assigned somebody that didn't have credentials you liked. But I can't guarantee an outcome, because it's, again, the RICO program, for those who don't know, is incredibly special in the way it's structured and how counsel and service providers are selected. So it's not it's not the same level of customization that we have access to. So I do not want to tell you that it's going to be the same amazing coverage counsel, because I don't know that. They could be, or they could not be. And I would certainly be more than happy to advocate for somebody if you wanted somebody in particular.
Okay, thank you very much.
Great question.
Deductible. Is it different deductible for example, $10,000 RICO claim opposed to $1 million liability slip and fall?
I'm going to pull up the answer to that question right now. I believe the deductible is smaller. No, it's the same. It's $2,500 is the deductible on the liability. So it's the same as the RICO policy. The difference is, if you want to get into the technicalities of it, the RICO policy has an increasing deductible that gets larger for each additional claim within a 3-year period, versus this that does not have that.
So from a numbers just a standpoint, if you're getting $10,000 of legal counsel, you're paying $2,500.
Oh, that was for the general liability
general
piece, and then we
liability
grabbed
piece.
the deductible for the legal expense wording. My recollection is that is a very small deductible.
Yeah, I wanted to see that because
It's a great question, Aaron. Let me find it for you. I know the RICO policy with like the back of my hand, because I've been working with it for 13 years, but this one is brand new. So I don't think it has a deductible. I'm trying to find it.
I'll let you find that. In the meantime, I'll sort of say the people on this makes sense. I already know who it makes sense for. I mean, the agents that are doing a lot of business in our brokerage, it makes a lot of sense. I think it's a deduction. I think it's a cost of doing business. I'm not going to say I'm a tax lawyer or know anything from a tax standpoint. I've imagined that you could write something like this off. And the cost is negligible for those making decent income. And it really does cover you in those sense. So as you do more business in real estate, you are more of a target for people to come after.
I found it. It is
Perfect.
nil. It is nil. My memory is better
Nil.
than I thought.
Nice.
It's nil, except for disciplinary hearings and investigations, in which case it's $1,000. That is a completely bespoke coverage for this program that doesn't exist in the normal RAG policies that can be found, I think, in some other associations and groups.
Great.
It also has, actually, I'll throw out one more really nice feature of it. And we're really pleased with it. It has a legal helpline. So if you have questions on any legal nature, like contract or whatever the case might be, you can call and get access to a lawyer who can help answer those questions in a lawyerly fashion, which I know Tim usually says, well, it depends. So, but at least you'll know what depends, and there's no like hard answer, but it is, I think, a fantastic value add for this to have access to a lawyer where you don't have to think that there's a clock ticking and costs incurred just to ask a simple question. And you also
It is general in nature.
General in nature, doesn't have to be linked to any of the coverages. It can just be a general legal question, and you can have access to bounce that off somebody. I think all your friends who are lawyers will be so thrilled you have this. I know Tim would be thrilled if I had it, because then I wouldn't ask him all my silly lawyer questions and I wouldn't have to be embarrassed that I asked them.
Well, we can actually add that to our talking points on this, because that's a big deal. We were looking at different at one point in time, legal, what was it? There's some sort of package out there that included that they would do a will for you. They would give you a free phone number for legal questions and a few other things. I forget what that was called. I know Tina would probably remember this, but it had something to do with, I forget what it was. Yeah. Would you remember that program, Tina? It was when I was managing Richmond Hill, and they came in and they discussed it, and they give you a will service. It was a monthly fee.
Legal Shield.
Oh, it was a legal shield. So, and that was one of their selling features. So to have that as part of this policy as well is huge. For $350, that's That's great.
Yeah, I've been working on this as a personal project for probably 3 years. And
Wow.
this is the second iteration of it. The first one, if I'm being completely frank, was so terrible I didn't actually talk about it. Because the price was so high. And I thought it was, I mean, again, keep in mind, as an insurance broker, like a real estate agent, I don't set the price. In your case, the consumer sets the price, and it can be completely out to lunch. They're like, my house is worth $2 million. No, it's not. But so in the first case, it was going down the line. It was going to be a positive. And then they changed it at the last minute on me, and the price was, I think, a level where I didn't feel comfortable recommending it because I didn't think it was right sized to the value. In this case, not only does it provide better coverage with more limits on the general liability piece, all these value adds mean that it's a very broadly appealing product at a good price. And I don't like selling things. If you called and asked me, do I need excess insurance? I will be the first one to tell you probably not. And it's pretty rare to as a broker to tell a client not to buy insurance, but excess insurance is not necessarily for everybody. But this does work for most people. So I urge you to review the website realistinsurance.com. Make sure that it ticks a couple boxes for you. If you don't do any transactions, that I wouldn't say you should buy this. That it does give you access to the legal helpline, so it's not without its charms. So
Okay, well, I'll get that website from you. So real.
I have,
as in- yeah.
if you don't mind, I have a further question. If you can expand a little bit on the commission loss protection where someone doesn't pay you, would that cover things like failure to close on properties? Because we're still dealing with that from 2017 where agents had firm deals. The deal didn't close due to typically financing or the market value went down. And some of our agents actually took out commission advances against some of those commissions. So I'm just wondering what type of commission coverage is involved.
So it's not designed specifically to be commission coverage. It's called small claims court contract disputes and debt recovery. So it has to be a breach of contract between you and the client. So, or at least enough that it makes sense to pursue it. So my view of this was if somebody had a buyer's agreement with you, is that the right word for it, Aaron? Buyer's representation agreement.
Sure.
And they breached that contract and then, sold with somebody else or something like, those would be the scenarios where I think it would be appropriate to trigger this coverage, because you have a contractual obligation for them to give you the commission on a sale, and then they've broken that.
Well, I'll give you a scenario, Ryan. Maybe it's spelled that paint this scenario. So the buyer doesn't close because they couldn't get funds. So the buyer is in breach of contract. So it is a contract dispute, and the contract was that they were to be. The contract is actually with the listings with the seller. So I guess that might not work. But if it was the seller, maybe that didn't close, that might be a contract that would be broken because they're contracted to pay you commissions, and due to their negligence, maybe, then that might be something that would cover.
There has to be a contractual part. It's not just for, out of the whim, like a disappointment. It has to be contractually based. So if they had an obligation to pay you, and what's important about this kind of coverage is where there's a contractual obligation to pay to pursue, that's what this covers. It's actually your cost to launch a suit against somebody else. And I will add this caution that's important that you would have heard from me in my presentation last year about the RICO program, is that the RICO program will not defend you for claims that come out as a result of you pursuing your commissions, unless there's some element of that falls cleanly in coverage, because there's actually an exclusion under the RICO policy that says it doesn't cover claims arising out of commission disputes. And so if you have a commission, just a willy-nilly commission dispute, and you go and you sue them in small courts for recovery of that, and they sue you back, and it's equally willy-nilly, and it doesn't have any foundation in failure to provide professional services or negligence in that area, the RICO program can't provide a response. It's strictly excluded. So at least in the one direction, and you also seek out legal counsel to suggest, like to counsel you as to whether or not this is a good idea, etc. So I think it's got tremendous value to the extent that you're protecting your income from a contractual break.
I'll express my personal prejudices on this. The opinions of Tim Clark are not necessarily those of ARS or its affiliates. But what I generally tell my insureds is that unless it's a really, really big honking commission, it probably isn't worth suing for. I defended lawyers, and I still defend lawyers. And for years, I told them the same thing. Like, suing for your fees is usually just throwing good money after bad. So I think in this case, the best part of the coverage would be getting advice about whether or not it was worth your while.
Agreed. Yeah, the advice piece is key.
Remember, your reputation means more than a $10,000 commission check. And we often talk to our agents about that too. So any other questions before we wrap up? I really appreciate that. We'll be getting out in touch with some of the agents that we know that would benefit from this program. We think it's a great coverage at a reasonable rate, and I think it would really benefit some of those agents out there that are doing good business and could use this. So thank you.
And thank you very much, Aaron, for giving us time to chat with you about it. We wouldn't have created it if we didn't think that it was valuable. And as I said, we had one that we didn't think met the value requirements to put recommendations on it. And that has changed with this particular offering. So I'm proud enough of it to bring it forward and tell people about it. So
I'm glad you did. Thank you so much, Ryan.
cheers. Thanks very much, everybody.
Take care. Bye. Thank you so much for watching. If you like our video, please hit the like button, the subscribe, and even the little bell to get notifications, just so you can stay in touch and watch more of these great videos.